And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, I'm working on your financial freedom. And it's been a while since I've tackled the news. For all of you people invested in the stock market, hey, good on you. I'm glad to see you finally pull out of 2.5 years of the doldrums where all you could do was dollar cost average, and now you're looking at new highs. I do think it's a good time for you to sell your shares in whatever you're invested in and invest in real estate. That's my personal belief, and I'm sticking with it. But at the end of the day, that's not the reason I want to talk about the news. The reason I want to talk about the news is I've been bombarded with stories that are telling me that real estate is the go-to investment, the best long-term investment of choice based on Americans' perceptions. And I'm looking at a Gallup poll right now, and in that Gallup poll, it says Americans continue to rank real estate as the best investment for the long term according to 6 options. So they get into what the 6 options are, and they break it down for you. So here, I'll just tell you what they say. 36% chose real estate, followed by 22% who chose stocks or mutual funds. 18%, they're in gold. 13%, they have something called savings accounts or CDs. Yep, there are people that are putting money into those vehicles right now because those vehicles are paying, well, okay interest because of what the interest rates have done. And looks like relatively fewer Americans believe that bonds are the way to go. Only 4% are invested in bonds, and 3% are invested long-term in cryptocurrency. I bring that up because real estate has been one of the best investment choices of all times, ever since the founding of this country. I'm serious about that. You can go back and do a deep dive on a guy by the name of Benjamin Franklin. Real estate is positioned to pay you 5 different ways. 6 different ways if you're involved in pure multifamily, which is a collection of 5 units or more. But there are 5 different ways we make money in real estate as compared to what these other options are. You need to know that. You also need to know that if you become a member of Lifestyles Unlimited and you educate yourself, you will invest correctly, and that will put you on a glide path to becoming retired in about 5 years or less. Now, some people can get it done sooner. Some people need a little more time. Everybody starts from a different place in life. Everybody has different goals and objectives they're trying to obtain. And everybody's different. Everybody's different. And at the end of the day, the point I want to make is that real estate can benefit all of you, regardless of your differences, regardless of whether you're black, white, yellow, red, orange, purple, green, whatever color you associate with. Real estate can help you earn a retirement. And I use the word earn a retirement because the real estate is actually working for you. It's paying you something called a cash flow. And that cash flow is very important because you use that cash flow to offset your earned income. I'm going to Redfin right now, and here's some of their takeaways from an article they recently published. Investors bought a record 26.1% of low-priced homes last quarter, 26% of all affordable homes. That means 1 out of every 4. So you think about it. 1 out of every 4 homes in a particular neighborhood could be rental properties, and they could be owned by small entities like you and I. And this is one of the ways that you can get to a place of retirement is you go into these different markets and you buy one single asset. You buy that asset, you improve that asset, you lease that asset out, you put long-term financing on that asset, and that asset pays you 5 different ways. It pays you cash flow. It allows you to capture equity in the asset if you bought it correctly. There are many ways you can buy real estate that don't allow you to capture equity in the asset. So you have to know what you're doing. That's where Lifestyles Unlimited comes in. We teach you everything you need to know. The other things that occur to these assets is it gives you the opportunity to take advantage of long-term natural appreciation. It also gives you the ability to take advantage of principal paydown. What's principal paydown? Well, principal paydown is a functionality of you making a mortgage payment every month. And when you make that mortgage payment, you make a principal and interest payment. Now, some of those payments are inclusive of taxes and insurance, but I'm only talking about the principal and the interest portion right now. The principal is not a business write-off. The interest is. You can write the interest off as an ordinary business expense, but the principal you cannot write off as a business expense. However, when the principal is reduced every month that you make that mortgage payment, you in turn get a little more equity added on to your balance sheet. So every month you make that mortgage payment, and the amount of property that you own that's your portional share that the bank doesn't have a portional share of becomes yours. So they are slowly ceding over to you portions of ownership because they're allowing you to pay down the principal on that note. Pretty cool, right? Okay. Now, the last way we make money in real estate, it has to do with the tax advantages of real estate, and what that allows us to do is take advantage of depreciation. Depreciation is something that the United States government expects us to take. As a matter of fact, our IRS code, if you actually read IRS code, it pretty much flat out says you will take depreciation. It's really not an option, even though I think it comes across as an option. It's not really an option. They expect you to take that depreciation. And what that depreciation does for you is it allows you to offset the income that you make. So in other words, let's say you make $4,000 worth of income, but you get $4,000 worth of depreciation write-offs on that income. What does that mean as far as a taxable event? It means you don't pay any taxes. I think it's amazing that you can buy a piece of real estate and you can make income on that real estate and not even have to pay taxes on that real estate. I mean, if you really think about what depreciation does for you, that's what depreciation does for you. And let's say you don't use all the depreciation. Let's say it was more than $4,000 worth of depreciation write-off. Let's say it was $6,000 worth of depreciation write-off. Well, you use the $4,000 that you use against the income on the particular asset, and then you have $2,000 of available depreciation that you can use based on what the IRS says you can use it on to help reduce your additional tax liability. I think it's pretty cool. And I think that you ought to look at the taxation and how taxation affects those other investments that you're probably invested in, because I think you're going to find that you don't get the same type of tax benefits that we receive on the real estate side. Most of you are in a situation where you're going to wind up paying some kind of taxes on the income, if you make any income at all on the assets that you're invested in. I know I'm making your head hurt, aren't I? But it's not me. It's Redfin. It's Gallup. It's all these different sources that have given me information that I'm sharing with you today. When we come back from the break, more on the real estate markets. Stick around.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
Del Walmsley interviews Chad and Lisa.
This property, for you to have done what you've done, won the award, changed it around, done all the re-up, has got to be worth a lot more.
We purchased it for $8.275, and it's worth $19 million now. So.
Wait, whoa. That is incredible. I can see why you won an award, and that's great.
Lifestyles Unlimited. Over 33 years teaching the real estate retirement roadmap. Text the word radio to 88007 for a $297 membership. Save $443 off the regular price. Text radio to 88007.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, I'm working on your financial freedom. And on today's show, I'm quoting from Gallup, I'm quoting from Redfin, I'm quoting from different sources that talk about real estate and not just real estate investing, but just real estate in nature. And Gallup caught my eye because they ran a poll, and they ran this poll, I think, back in April of 2024, and they asked the following question: which of the following do you think is the best long-term investment? And the answers that populated were real estate at 36%, stocks and mutual funds at 22%, gold at 18%, savings accounts and CDs at 13%, bonds at 4%, and cryptocurrency at 3%. So I think it's pretty interesting that over time, real estate is still the king of kings. Real estate is still at the top of the list. Well over a third of all respondents say that real estate is the best long-term investment. But here's the thing that I think is probably very funny. And maybe it's not funny at all if you're in this particular situation. If you think that real estate is the best long-term investment, but you're not invested in real estate, why is it you don't invest in the best asset class that's out there? There's a couple of reasons. Number one, you may not know how to. And I'm not picking on you. Now, some of you are going to say that stocks and mutual funds are at all-time highs right now, and I think that's great. I think it's a great time for you to pull your money out of there and start investing in real estate assets. Start being a part of the 1/3 that believe that real estate is the way to go. And I have a lot of statistical information that I share from time to time on this radio show that reinforces the fact that real estate is the way to go. I mean, I'm always talking about rates of return, right? I'm always talking about return on investment. I'm always showing you how real estate actually pays you more effectively than any of these other asset classes. Real estate is the one. I mean, let's talk about this list. Real estate pays you cash flow. Do stocks and mutual funds pay you cash flow? Only if you have dividend producing stocks or mutual funds. Only if there's a dividend component to it. And I would venture to say that dividend that the stocks and mutual funds pay is minuscule compared to the cash flow that real estate pays. What about gold? Does gold pay you cash flow? No, gold only pays you if gold goes up in value, and you lose money if gold goes down in value, right? Okay, what about savings accounts and CDs? Now, technically, they pay you cash flow. They pay you interest, right? But here's the problem with the money that you're making off that interest. Unlike real estate, there's no depreciation write-off. So there's no depreciation that you're taking on the savings account or the certificate or deposit that's offsetting the income that you're making. So you're paying full taxes on whatever that income is. It's just the way it is. What about bonds? Do bonds pay you cash flow? Well, sometimes they might pay you a royalty, right? Sometimes they might pay you a dividend. Some, depending on how they're structured, yeah, maybe they'll pay you a cash flow. But not all bonds do that. Not all bonds are created equal. No. And here's the other thing. Bonds, well, they're kind of like glorified savings accounts. They really are. I mean, you invest in those financial instruments, and your money sits in those instruments for however long that instrument is supposed to exist, right? Right? I mean, there's ways to change out of it, but at the end of the day, bonds don't pay you that much. Now, they're probably paying a little bit more right now because they too are linked to what the interest rates are doing. But at the end of the day, they're pretty much like savings accounts and CDs. And what about cryptocurrency? What is cryptocurrency doing for you? How does cryptocurrency pay you? Most of you have no idea how cryptocurrency pays you. I'll be the first one to admit, I know very little about cryptocurrency. Now, I've got a buddy that he likes to trade in cryptocurrency. He has spent a lot of time learning how the cryptocurrency works. I still think it's kind of a sham. I really do. And I've got no problem saying that in front of millions of people. I think it's kind of a sham. I think it's too early to rely on something like cryptocurrency, especially when you have something like real estate that is time tested and proven throughout the years. I mean, I pointed out earlier in the show that Benjamin Franklin was one of the first self-made multimillionaires in the United States of America, and he bought assets very, very similar to the way we teach our members how to buy assets. The prices were a lot different 200 and some odd years ago. I mean, you think about it. You probably weren't paying like $200,000 for an entry-level home back at the, when this country was founded. Maybe you were paying, I don't know, $20. I don't know. That would be an interesting show. That would be an interesting show to look up and see what the value of real estate was back in 1776. I wonder what the standard 3-bedroom, 2-bath, 2-car garage. Of course, I guess they didn't need a 2-car garage back then because they didn't have cars. Maybe what they had was a 2-carriage slot, maybe so you could park the carriage. But then why do you need 2 of them when one would work just fine? So maybe it was a 3-bedroom, 2-bath, 1-carriage spot. Oh, but wait a minute. Most homes didn't have a second bathroom. As a matter of fact, most homes, I don't even think, had a bathroom because the bathroom was outside, right? Yeah, it was called an outhouse. Yeah, boy, I have definitely gone down a slippery slope on this radio show. Let me see if I can pull it back together. So what I'm commenting on is the fact that real estate remains relatively unchanged since the founding of this country. And many of the techniques that we employ as Lifestyles Unlimited members are the same techniques that were employed many, many years ago at the founding of this country, and they still make us money. And the point I'm trying to make is cryptocurrency, to me, it's just too new. There's just too many things. There are too many unknowns about it. I know there are people making money in cryptocurrency, but I know there are people losing money in cryptocurrency. And I think that it's a very speculative type of investment. It's not a hard asset. It's not an asset that I can go and touch. I can't go and touch it. I can't rehab it. Well, maybe I can. Like I said, I don't know that much about cryptocurrency. But at the end of the day, I can rehab a single-family house. Now, I think you also need to know that any collection of units, whether it's 1 unit or 2 units or 3 units or 4 units, anything between 1 and 4 units is considered single-family. I know, a 4-unit community sounds like a multiple-unit community, right? Sounds like multi-family, right? But it's not. It's not. Any collection between 1 and 4 units is valued based on a single-family valuation scale. In other words, what you do is you go out and you take a look at what similar properties have sold for recently based on location, based on size, based on amenities, based on price, yada, yada, yada. You buy a property based on what comparable sales have been, right? You know how that works because many of you bought your own principal residence, and that's how value was determined. But when you get into the multifamily space, and that's any collection of 5 or more units, the game changes because we use a different form of valuation. We use something called an income approach, which is different than a competitive market analysis approach. Does that make sense? Okay, so what am I getting at? Well, let's say you're going to buy a 40-unit apartment community, and let's say you're going to buy that thing for $800,000, and you need an additional $200,000 in rehab costs. You're going to put 20% down, and you're going to come in with $50,000 worth of closing costs. That's $250,000 that you're putting into the asset. Now, on the day of takeover, you take over the asset, and it's producing an income stream of $300,000 per year. It's producing an expense stream of $200,000 per year. So to determine the net operating income, in other words, the NOI of the property, that's one of the 2 values that you need to know in order to determine value, you subtract the expenses of $200,000 from the income of $300,000, and that gives you net operating income of $100,000. Now, you're going to have debt service on the property on that $800,000 loan, and that's going to be about $70,000 per year, but you're going to cash flow about $30,000 on that particular property. Now, When you take the net operating income and you divide it by a cap rate, in other words, a cap rate is something that the markets put on different types of assets, and what it does for you is it says if you were to pay all cash for the asset, you could expect a certain rate of return. So what we do at Lifestyles Unlimited is we use just a very generic cap rate of 10%. So you would have $100,000 of net operating income. You divide it by a cap rate of 10%, and you have a value of $1 million. Pretty cool, right? Now, when you become a member of Lifestyles Unlimited, we're going to teach you 28 different ways that you can increase the value of a multifamily property. As a matter of fact, you're going to increase the income specifically 28 different ways that don't have to do with raising rents. And what we want you to do is we want you to increase the income streams by 10%. So in other words, the income streams were $300,000 when you took over the asset, right? We want you to take advantage of those 28 different ways that you can increase income and get that income line to $330,000. Now, your expenses should remain relatively unchanged. You should be able to manage and control your expenses, so they should remain at $200,000. You're going to have a net operating income of $130,000. Your debt service hasn't changed. It's still $70,000, but your cash flow has doubled. It's now $60,000. We take that net operating income of $130,000 and we subtract the debt service of $70,000. We've doubled our cash flow and we're making $60,000. Now, the value of the property goes up to $1.3 million because we take that net operating income of $130,000 and we divide it by that 10% cap rate. Now, the value of the property is $1.3 million. And now what we want you to do is we want you to refinance the property, because what you're going to do is you're going to find a lender out there, and we've got them as part of the Lifestyles Unlimited vendor program, that will loan you 80% loan to value against that new $1.3 million value. So you're going to take out a loan for $1,050,000. You're going to pay off the original loan of $800,000. It goes away. You're going to take $250,000 cash back. And that's tax-free, by the way, because you just did a refinance of the loan. You haven't sold the property, so it's not a taxable event. You're taking $250,000, you're putting it into your pocket. You're leaving $250,000 of equity in the deal. Now, because you did refinance the property, you did put a higher level of debt on the property because you took money out. It will affect your cash flow. The cash flow is going to go from a $60,000 amount down to a $40,000 amount. Now, think about it. You've just refinanced this property. The $250,000 you originally put into the property is now sitting in your pocket. It came back to you as a tax-free event. And what it's giving you is something called an infinite return on the asset. The asset is paying you $40,000 per year, but you have $0 of your own money invested in that property. The $250,000 that you put into the asset is now sitting in your pocket. So what do you do with that money? Do you go out and buy boats and jet skis? No, you don't do that at all. What you're going to do is you're going to go out and find another 40-unit apartment community and wash, rinse, repeat, because now you've got $250,000 available to you, and you can use that $250,000 to buy yet another asset. This is how we make money in multifamily real estate. We continually improve our position. We continually leverage our value in our properties. And in doing so, we're able to buy additional assets without always having to put additional monies into the buy account, if you will. Does that make sense to you? Okay. Earlier in the show, I mentioned that there's 36% of all Americans think that real estate is the way to go when it comes to, your long-term investment goals and objectives. And I would agree with 1/3 of the country that, yeah, it's the way to go. I just showed you with multifamily how you can make a ton of money with multifamily and still not have to continually reinvest into your sourcing capital. You can actually acquire the property, do improvements to the property, take a tax-free cash out refinance loan on that property, get your capital back, and then go out and buy another property. And you can wash, rinse, repeat. You can do that as many times as you want to do that. There's no one saying that, no, you can only do 3. No one's saying that. No. If you want to do 4, do 4. You want to do 6, do 6. It's totally up to you. It's completely in line with whatever your goals and objectives are. Yeah, let's not forget about those goals and objectives, because those goals and objectives are still important. Now, what do we say to the other 2/3 of America that think the best long-term investment is stocks or mutual funds or gold or savings accounts or CDs or bonds or cryptocurrency? What do we say to those people out there that are doing that? Take your money out of that and put it into real estate. Yeah, it's as simple as that. Take your money out of those assets and start buying real estate. But before you start buying real estate, get to Lifestyles Unlimited and allow us to educate you on the correct processes necessary in order for you to invest in either single-family assets or multifamily assets. And you don't have to decide right now which one you want to invest in. We're going to teach you how to do both, because we have learned that both are reliable investment objectives, reliable investment assets, reliable period. Yeah. Now, real estate, you might think it's risky. You might think it, is going to take a lot of your time, and you might think that it's going to cost you a lot of money. But I just pointed out to you just a few minutes ago how real estate doesn't necessarily take a lot of time. It doesn't involve a lot of risk. And at the end of the day, I just told you how you can start with $250,000, which many of you have sitting in the stock market or mutual funds or in gold or in savings accounts or in CDs or in bonds or in cryptocurrency. Many of you have that money sitting there, and you're not getting the types of returns that I'm talking about that I've pointed out to you on today's show. I think what you need to do is get into Lifestyles Unlimited and allow us to teach you the fundamentals of how to make money in real estate. And when we do that for you, you don't have to worry about the problems associated with investing in the stock market, investing in mutual funds, investing in gold, investing in the savings accounts, investing into CDs, investing into bonds, or investing into cryptocurrency. I think you need to be running with the biggest pack in America. And if 36% of Americans think that real estate is the best long-term investment goal, then I think we have to change that number, and we have to get it up into the 40s. And when you step across the aisle and you become a member of Lifestyles Unlimited, we will have effectively accomplished that, because there is plenty of real estate to go around. If you want to do what I'm doing, you want to do what the 50,000 members of Lifestyles Unlimited are doing, go to lifestylesunlimited.com, sign up for a free workshop, and let's get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.